Look at this crude, JP.
That was great, wasn't it?
Yep. Come on, baby.
That was enough to cover my position. So,
my trend premise is in jeopardy on the Nasdaq here. They gotta get below that 73 though. You just can't get below there yet. Welcome everybody. We're kind of chatting as we're waiting for others to come in, and I'm trailing a little crude here. This is something we call a second move trade.
What did inventories come in at? I didn't even look at them.
Oh, I have no idea.
I just saw on the pop, and I had, as you know, I had options in there. So
yeah.
Yep, I am, Matt.
I'll go ahead and peel some off here. Let this thing just roll.
Yeah, Joel, we'll cover that as well. Hi, Frank. What's 7,000 build? Okay, thanks.
Oh yeah, go ahead.
No, go ahead. I'm good.
Yeah, so the crude trade, and this is one of the ones in our playbook. It's called a second move, where you can see the initial balance is here, and it's on a binary event like today where we have an EIA event, and you look for where is IB extension first. So IB extension was higher first, and then after the event, do we extend in the opposite direction? So you can see we extend to the downside. So these buyers that were active at the release, which is right in here, are now gone. We got sellers in control, and we also have a gap that back here, and we had in our plan we had a level down here that we were looking at that we gapped above. So the potential trade, if you're not in the trade, is to look for rotations back up into this area of value, find a trigger, and you're looking for 46.80. Now we may not get there today. That may come in next week, but that's and typically you want them to happen pretty quick. You want this, and this has happened within half an hour that we've traversed the IB. So that's a pretty good move. So we're looking for rallies to sell, and then Nasdaq trend may still be going. Tag on it. Yes, get a lower low. So we had some Fed chairman speak today, and looking for potential rotational opportunity. I mean, at least I am. If we can keep from trending, we're actually into a really interesting area. Let me pull this up, and you can kind of see why this is such an interesting area that we find ourselves in. All right, so this was the FOMC release from 2 weeks ago, and we have not, once we sold off there on that rate hike, we've not come back to that. You can see that we've come up. There was actually some single prints that go to 25.34 that we've come up to and have not been able to get above with multiple attempts. So if we can get above that, I think there's a path back up into this area. But it's tedious, and it looks like sellers are just kind of they keep pushing that, and they've thus far accepted price higher. Nasdaq looks like it's trying to make new highs. Nasdaq's got another level up, they would clean up those singles back up to 64.34 if we trend. And then, I mean, if we trend, we could just go higher the rest of the day. But what's interesting, where the opportunity is potentially, is if we could stop trending, we've got like these holes in the profile here. That could be opportunities for rotations lower to clean up, but they just keep migrating value higher. So that's not what you want to see if you want to be short.
Yeah, it's a pretty thin market below us. But hey, Frank, I see your question there. Thanks, and thanks for being with us. No, we don't trade stocks, and I mean they're attractive to us, and I guess anything we do on the stock side mostly happens in the options, and we really don't talk about options much. It's just some things that we do on the side, but mostly futures and commodities, yes.
Yeah. We are this year looking at some ETFs, basically some sector ETFs as opportunities. But yeah, like JP said, we're typically expressing that on the option side. So I'm just going to put an alert in here so that I can not look at this.
But it's a very active Friday, and we expected that, of course, because of the trifecta, I guess, if you will. We had non-farm payroll out this morning, which was obviously much better than expected. Everybody was expecting a downturn because, with the sell-off in the market and some weaker earnings coming out. Apple reported the other day, or warned that fourth quarter earnings aren't going to be as strong as expected because of China slowdown. And then the Fed chair, Uncle, as we call him, Uncle Jerome, he was speaking this morning as well. So we've been off to the races there. We talked about crude EIA report this morning.
Has anybody seen what he said? Has anybody seen any?
I have not. I have not seen anything. I probably need to go look at the news. As you guys can probably tell, we don't pay attention to news very much around here. So. I will say on what's in the world of down equals up. I mean, I saw unemployment ticked up to 3.9, so it went up 0.2%, even though there was more jobs. Which that to me that's seasonal data. So that's seasonal retail jobs, which we knew retail was strong. The thing that means, why does that? Why does that? So if you can have an unemployment rate that goes up higher, and yet you can still have markets going higher, it's really because everybody doesn't want higher interest rates. So if we start seeing softening in the employment data, then we're going to see equities start moving higher, because the Fed, has already basically paused any interest rate hikes for 2019. And any weak data could be seen as an opportunity for them to continue to go. Question. You can apply strategies to stocks. Yeah, everything that we do is agnostic to products. So if you want to trade Forex, you want to trade futures, you want to trade equities, you can do that. It's consistent. We love the futures just from the leverage standpoint, from a capital. Understand also that for some people, the leverage, or even just being in a futures contract, it's a little cost prohibitive. But yeah, it all works. Okay, I got some alerts set in. Let's jump in. Welcome everybody. So typical format on one of these sessions. I mean, obviously we got live markets going. So if there's something going on, if we find a trade, we'll look for that trade. But we do these on Fridays. We started this last year. We're going to keep doing it this year. Just want to remind everyone of just the risk of any trading, not just futures or options on futures, but if you're trading Forex, if you're trading a leverage instrument, to be aware of the risk around that. And just a little bit of background, I'm Josh Schuler. I'm the founder, Trade with Profile. Got introduced to the profile in 2012, and that was really kind of a game changer for me. And at about the same time, I met JP, and we've both been in the markets for some time. JP's got more institutional time in the saddle than I do, but we've both been on the institutional and the retail side, and love the markets and the profile. And today we're going to talk about using the profile to pick better times to trade. Where this comes from is, so our kind of approach to trading development, we're a skill development firm. So if you're not consistent in your approach to markets, we're good guys to talk to, because we'll help you put together a playbook and an approach that can lead towards consistency. When it comes to driving performance out of that, we have other partners that we might encourage you towards, or if you find that there's some psychological or emotional stuff around your trading, which happens. I mean, it's a high performance industry, but also we find that sometimes that happens because you don't have the consistency at the front end. So we always start with the skill development first, and then tweak from there. And everything that we do is kind of around 3 objective areas. What are the 4 behaviors observable in every auction?
the 4 stages of auction competency, know which one you're in, and 4 questions to ask before ending the trade. Basically, it's like, how do you read the markets? How do you express risk around that? And how do you know how good you are at that? Where those all overlap is where, we find some good expectancy. And we do that in these, modules that we go through, 1 a week. Next week, we're going to be talking about identifying auction times. So everybody in our community is going to be looking at specific times to trade, which is what we're going to talk about today. And it really goes after this challenge. The challenge is like, when are the best times to look for an opportunity? And what kinds of opportunities should I look for during those times, right? I mean, you're in front of the market. We talk about how there are better prices than others to participate. Well, there's also better times than others to participate. But if you don't know when those times are, every time is valid, and you'll end up trying to look for trades. If you're in a forex or futures, you're looking overnight. You're looking all over the place, and what ends up happening is it ends up hitting performance because really all times look good to trade. So that means that you can't ever rest, you can't ever get away. And then like trades that you think quote unquote should work don't. And you're like, why isn't that? Well, some of it has to do with the time that you chose to be active in. And so what's helpful is that there's an auction principle is that there are observable sessions or periods and micro periods throughout a trading session where consistent and predictable auction behavior occurs. So if it's consistent, expected behavior, that means I can lean on that and I can build an approach and a plan around that, which ultimately means that I can recognize these sessions and I know, hey, when to be active or inactive accordingly. So I just wanted to real quickly look at these sessions and kind of talk about them and look at a few of those and kind of how we use those, specifically around trading development. And what I want to do here is let's look at the ES here real quick. I'm gonna turn off some of the stuff to just. So one of these sessions that obviously starts is the open. Like when the auction opens and there's flurry of activity, there's a lot of volatility. Like that's like one of the early sessions that everybody looks for. It's also one that can do a lot of damage to traders who don't have a really good approach. And so if you don't have a really good consistent approach to the markets yet, you're not consistently extracting value from the market, the open's probably not for you. It's actually better to wait. And one of the periods after that we focus on, the one I want to focus on today, is just this, what we call the initial balance, or the first hour of trade. So you can see the range of this initial balance in the ES, which we're flirting with the top of that right now at 25.16. So this range of price, which is the first hour of trade, is what we call the initial balance, and in auction theory. And we use that hour as an interesting range because there's some statistical measurable behaviors that occur in this first hour that are really interesting. Once we've exceeded that range, so for example, we've exceeded to the upside today, we can extract some behaviors that actually give us a probability of whether or not we would see the low. So right now, because we've extended to the upside, there's only about a 30% chance that we would see 2477 area today. Okay. Interesting also is that this range, and it doesn't matter what product. So, Frank, to your question, does this work in every? Yeah. Equities, whatever. There's a 97% chance on every session that we will exceed this range. So you can see that this stat has been honored today in the fact that we've exceeded that range. So 97% chance you'll exceed that range. And then once you've exceeded it, it's only a 30% chance that you'll exceed it in the opposite direction. So that starts giving you some interesting things to deal with. Also, if we take, I'm going to add an extension metric here. Okay, so you can see 2537 up here. That's 50% extension of this range. So there's only about a 25% chance that will get to 25.34 today. So by waiting until I see the first hour's trade, all of a sudden I've got some metrics to play with that I didn't have before that are really really interesting and really helpful as far, in terms of being able to express risk. So after that, like, we're getting closer to what we would call lunch land, which is kind of this 12 to 1 p.m. Eastern. And that's a great place not to trade. If I'm not in a trade by that period of time, I'm probably not going to trade. I might come back and look after 1 o'clock. But and there's other periods to talk about, which we're going to cover that next week with our Pathway community. We'll look at all the different sessions, pre-market, post-market, at the close. But I really wanted to focus everybody on, this first hour. And if you're not yet consistent in your approach, to consider waiting to express an opinion until after that first hour is complete, because that period, after the initial balance, so from the initial balance to lunch, is really kind of a great area to focus. There's much higher degree of predictability in price action than in that first hour or right on the open. So that's that. That's kind of what we wanted to cover. The rest of the time, we'll just leave it up for questions, and we'll also see if we can find a trade. And I'll tell you that, the trade that I'm looking for right now, if we get it, I don't think we're going to get it, but as I want to see, I really want to see the NASDAQ back around 6,300 in a rotation lower, but I just don't think we're going to get there. I think we're just going to keep pressing higher.
That crude is impressive today. I mean, we did 2 up, 2 down. That's some serious range.
Yep.
Any questions, guys? Anything regarding markets, profile? I mean, throw them out there. We'll help. We'll try to answer them all.
They're balancing that thing. I don't think there's going to be any sellers.
Frank, you had a nice trade in Apple long today. Nice. I didn't look at Apple today. What was?
Probably some bounce after all the bad news.
Yeah, and I saw that some people, a lot of people were selling the puts down here on a spread, and the puts, the spread sell, the verticals were pretty heavy down here. Oh yeah. So let me see.
Yeah, let's look at Apple here real quick, because
yeah, Apple's done well. Yeah, good trade. I mean, it opened up at about 144 and some change and went up to 48 today. Frank, were you long coming into this morning, or what did you just establish this morning?
it's got in at 145.
Okay. So
I mean, this is this is where this works. So you can see near-term value 156, a little bit longer term value at 157, and much longer term value at 187. So there's some really nice targets, from a swing side to the upside that you could be looking for. I like that 156. I'd actually, you could use 144 into next week as a risk and look for, opportunities to buy, to be long.
Up to 155. Yeah, that's good.
155, yeah.
Still in it at 145. Yes, target 146, 147, 48. Yeah, I'd push that baby as long as you can, as long as it's a free trade.
Yeah. And nice. Scott, I saw your question on the stats for the IB extension. So that comes from, that's 1,000 trading sessions. So about 5 years of data, and I do that on a rolling 5-year period where you can actually extract that. It's got an alert. Oh, that's just
that was just a
toss
alert.
But those stats stay consistent. I kind of run it every couple months, and it's pretty consistent.
Hey, John, we can show you the Euro USD. However, there's no volume in it, so we'll show you the 60, which is what we we would trade, it's the equivalent, it's the futures, the Euro futures. So we can get volume on that, which then obviously we need to be able to run the profile. So we prefer the 6A on that. Not to say that it's any worse or anything. We just can't.
You looking at Euro?
Yeah, type in just type in the pairs and show them what shows up on that. So you see here we have no profile because we can't get volume on it.
You can do a time-based profile.
Yeah.
And then because it's the Euro over USD. If you look at the 6E, which is going to be an inverse, you actually do get. Actually, no, it's not because it's over
the Euro. Yeah, the Euro's the 6E is not. No.
I was thinking about Canadian dollar. That's
yes. So the TPOs are fine too. They work. Okay. I use the TPOs as well, but we really lean heavy on the volume side of it. In my book, volume comes first before price. So we definitely want volume. And sometimes we're trading with in our opinion, you trade with one arm behind your back if you don't have any type of volume. So,
and that, I get this question. I'm glad you said that because that's a question I get asked a lot too. Is what's more important? Is it volume or time at a price? And if you go back and look at what Stottlemyre and other guys at Chicago Board of Trade were trying to do with the profile when they developed it in the 80s, they were trying to approximate volume at price. Well, they couldn't pull real-time volume at price data, so they approximated it by. Yeah, we're getting new highs in the Nasdaq here. They approximated that data by using time, but now that we can get real-time volume data, that's the preference. Hey John, good to see you, brother. I was wondering who's asking that Euro stuff, and John's a Forex guy. Oh, here's a question. Okay, so Joe, you saw we were talking about in our Slack channel where we crushed the delta. So here, and we were talking about, where did Matt say that? Oh yeah, they crushed the delta in crude. So here's what this looks like. And delta is a measurement that looks at the difference between trades on the bid versus the ask. And we'll look at this way. So an internal metric that we use is what an order flow. So there's two ways to look at it. There's the order flow per period, and then there's the cumulative. So you can see that the cumulative price action delta, how the auction was going today was strong to the buy side up until we had the EIA report. And then look what happened. They basically said, nope, we're not interested in buying this anymore. So that's where they crushed. They almost halved the cumulative delta for the full session. If we look at the RTH, which is just the cash session, you can see they actually went negative. So that's what we meant by crush the delta. Like the delta was positive up until that point, and then it got crushed. If you look here at the Nasdaq and why it's going to be hard for the Nasdaq to go lower, is look what's happening. Look what's happening to the cumulative delta, and as we're having subsequent periods, they're just buying. So all of the orders are to the buy side, to the buy side, to the buy side. And that's, if you can't see stuff like this and you try to short this, you're gonna, and you might say, well, I should short it because we're already up 150 points. We're stretched, right? Well, no, because the behavior is saying that they're still stretching it, or they're still doing a good job facilitating trade to the upside. So until you see that change, and they're just increasing it, or see it diverge, it's going to continue to pullbacks offer opportunities to join the trade.
Yeah, Mike's got a good question too. He said you mentioned the best times to trade in the morning, but what's the best times to trade in the afternoon?
Yep.
Well, let me answer that two different ways. After lunch, okay. And what I would say before the 30 minutes before the end of the cash close. I think if you're trading into the cash close, it's a risky proposition. So that's probably the better times, because typically after lunchtime, that's Eastern Standard Time lunch. So 12 noon Eastern Standard Time. After that time frame, probably 1:30 into that close, but 30 minutes prior to the cash close. So those are probably the optimal times. I will tell you though, I know I am, and I think Josh as well, as unless it's really active, we're less likely to trade afternoon.
Yeah.
Now, with that being said, we just discussed this the other day with the team inside the channel, is that, it's important that you go back throughout the whole year and look at every one of your trades and find out where you were most successful, and your times. Was it off the open? Was it at the 9 o'clock time frame? Was it the 1 o'clock time frame? Where was your most successful trades at? That actually will give you the best time to trade. Like, if you're more successful off that open, you have your trade plan says, I've got this trade off the open, it's really working well for me, then that's probably where you want to focus at. And then ignore the rest, because it's not about trading all the time. It's, it's about capturing your funds, and then, knowing where your sweet spot is, and then get the heck out of there.
That's right.
I mean, this is not a 24/7 casino. I mean, it is, but it's not a casino. Let's not act like that.
Yep. Yeah, good question.
Yeah, it is a great question, actually. All right, what insights can one derive from observation for 4 auction behaviors? Oh, Josh, I'll let you take that one. That's a great question, Tony. Very good question.
Hang on a second, I'm just. Copy.
We had some sellers step in on that NASDAQ.
Yeah, but they're well. This is relevant to the question. What from the 4 auction behaviors? So look here. Okay, what direction is this auction trying to go? I mean, that's where you start. And here was a beginning. We had auction kind of resting, and then we had the Powell comments, and then we have a beginning. And since that beginning, we've just every spot where we based, we would then pause for a second, and then have another area that we base, and then we have another area that we you can see these little buying spikes here. Okay, and we are not taking any of those out. So this is a move, and what we're looking for is, well, where's the end of the move? And we don't know where that is yet. So what we have to watch is, we have to say, okay, well, where does that behavior, here's more development. It can't get below this. Here's another, spike. Now the spikes are getting weaker as we get later in the day, which says, it could be coming soon, but we're waiting for the behavior that would shut off this auction. So you're looking for behavior in the counter direction that would be strong enough to shut off the upside auction. So until you see that, there's no reason to think that this thing is done as a move. So how can you use that? What can you derive from that? Is if you're long, there's no reason to be short. And if you want to be short, there's no reason to be short at this point. So, you're just kind of watching it. And basically how I'm doing it is, I'm just kind of, I've been moving alerts, because I see opportunity, and I see poor structure in this profile. Now I also know it's a Friday. I know that volume is going to start, typically would start to wane, as we go lower. But unless I get some strong sellers to come in and stop this one time framing higher behavior, there's just not a good probability that I'm going to get any rotation. Plus, I can see that the point of control has migrated higher. So when people are migrating value higher, that's a good indication that we're going to continue to push higher. And so that's how I can use those behaviors intraday. And what I take out of that. Let's look at an example here.
when I say, it's shut off in one direction, okay? Here was crude moving higher, and then you can actually see there was some buy volume, but the price action like significantly took back prior higher moves. And then all you saw was sellers coming in after that. So that basically is saying now, okay, the up move from yesterday is done. And now the auction is going to start balancing and go into a behavior we call rest. And I basically have, until we can make new highs of a 49.20, that's at least one side of this balancing zone. I don't know where the other side is. I think my premise is it's down here at 46.80. So what I'm now looking for is I'm looking for opportunities to be short for the move down here. Places that I can express some risk.
And for the NAS, and again, Friday, my rules say that I'm done already for Friday.
Yep.
So if this was a regular day, I would be looking actually for that last 30-minute candle low to get taken out before I would get interested to the downside. In this case, it would be on the NASDAQ 6380 halves.
Yep.
So other than that, I'm sitting on my hands. There's just, for one, it's too late to buy up here at this point. It needs a rest for a little while. So this is one of those things that keeps you from chasing and doing silly things.
Mm-hmm.
So, all right. Anybody else have any that was a good question, Tony. Thanks. Any other good questions? Throw it out there. I know somebody's got something going on. They got to, and there's no wrong questions. And if you're struggling with something and want to discuss it, throw it out there. Because guess what? I'll tell you right now, anything that you're going through, we've gone through it, period.
Yep.
Do you guys have a Twitter page?
Yep.
Yep.
Yeah, it's Trade with Prof, and we'll you can just search for Trade with PROF. It's actually here. I'll post it in the chat here.
It's We Rock. It's at We Rock. No, I'm just kidding.
Yep.
There you go. And we post some charts in there in the morning, typically.
Yeah, we started posting some daily decision levels. We post those in the evening because we kind of determine the levels that we want to be active in the day prior or after we've seen the session. Could it be? Could we get some sellers? See, at this point, I would have to see just what JP said, I'd have to see a lower low on a 30-minute before I'd be interested. So this could just be pullback to find more buyers for the next leg higher. So I'm just, until I see some strong selling, not gonna get lured in here because basically I'd be selling the pullback.
Yeah, that would not be good. It's a recipe to get run
Yeah,
over.
the delta is really strong, and actually, so you got strong delta to the buy side, and on this platform, a negative number means strong buying volume. Also buying delta. Also notice on this histogram. So this is the cumulative of delta at prices. Look, it's all been to the buy side. All of the buy side. So it doesn't mean you won't get little wiggles lower, but those right now are still opportunities to buy pullbacks. They're not opportunities to go against this unless we could start. If we could make lower lows, if we could get back inside that initial balance range, then there's the chances of a trending behavior are diminished, and then it increases the probability that we could go after that interesting area that I'm excited about.
Yeah, I want you guys to think about this too. Frank, and I'm going to use Frank an example here. Frank has a great trade on Apple, right? He is going with the momentum, and you can call it a momentum trade, whatever you want, but he's with order flow at this point. And that's key. You want to be with order flow and where the majority of the orders are going. And right now they're not to the sell side. So if you're trying to fight this to the sell side and think you're going to get a big trade, it's not going to happen. You think about it, we've ran off the open here. We have, what have we ran here? Let's take a look.
Yeah, here we go. I mean, you can look at the total today, total high-low range in the NASDAQ's 280.
Yeah. So, I mean, are we going to get a 100-point swing back? Yeah. I mean, we could get 50 points. That's probably reasonable. But, you know, when's that going to happen? I have no idea. And are we going to get another 100 points up at this point? That would have to be one of the largest moves, you know, in one day, a 300-point move. So I don't think that. What's our expected
range is basically 119 points today.
Yeah, I mean, we're way past that at this point. So I guess when you look at it that way, guys, you got to think, okay, how do I stay out of this thing? Mm-hmm. And there's a couple different ways. Get up and leave your computer. That's one way. All right. Turn any type of order entry off. Okay. Whatever you do, keep yourself from doing something silly. And that's where the most problems with traders have. Most people that we talk to and we see have two issues going. And again, it's nothing to be embarrassed about. We've done it as well. But Josh and I, you know, the thing that we can guarantee is that we've made every mistake in the book in the past. That's it. So what that does for you though, guys, is it keeps you out of losing money for silly reasons and what we call reactive reasons. Okay. So the market went up today. Yeah, it did. If you didn't get it, you know, guess what? I talk to people about this constantly. There's going to be many, 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 many more opportunities this year. You don't need this one opportunity. Remember, one opportunity is not going to make a year. However, one opportunity can ruin your career in trading. Okay, so think about that when you take a trade a little bit. And again, when we use the questions, those are the key. Again, those are to put things in perspective and understand the context of what's going on, and also what it means to your trade as well. Just to question mark. John, clarify that. I don't know what you mean by that. Sorry.
So you're talking about the spreadsheet. Are you talking about this, Frank?
Oh, just a joke. I got you, bud. Sorry.
This is our trade plan. So for participants in our pathway, we send that out every morning in 4 different products.
John was talking about 2 issues. He goes, just 2. And I go, no, there's plenty more, buddy. I got a book full of them.
Yeah, absolutely.
You know what? It always makes me mad when somebody says, oh, it's the rite of passage to be a trader. You know, yes and no. I mean, you're naturally probably going to make those trades. I wouldn't say, oh, since you made the mistakes, that you're a trader now. That's BS, right? Mm-hmm. You know, what makes you a trader is that you stop making those or you reduce them, right? And you learn the ways. I mean, we're all human. We have emotions. We're going to make emotional mistakes, but we have to be able to reduce those and be able to recognize them, why they're happening, so we don't make them. Because we still feel them. I mean, I feel them too. It pisses me off when we get a big monster move, right? And you're not on board. You're like, okay, that's painful. So guess what? We got to wait again. And that's the hard part in trading, is waiting.
There it is. A couple more questions. I mean, guys, great questions. So Ken, you're asking, is crude worth shorting here, or would you wait for higher levels? So I'm going to give you the lawyer answer. It depends. I mean, I like the behavior. Here's one way to think about this trade. Okay. We've got a really, really, really good target down here back to this 4680. Also with the gap close, we've got negative delta here. Look at the daily candle. All right. So the daily bar is showing some good selling excess. So, I mean, here's how I'm kind of trading this is I'm short some, and I'm looking to short, you know, I would start to get nervous if we got above 4870. And I would absolutely be wrong if 4920 came before 4680. So that's from a behavior. Now, how you trade that and, you know, how you construct that trade, whether you do that with, you could do that with some options, and you could do a call vertical spread, you know, or you could leg into the position and, you know, say, oh, I'm going to nibble here, and I'm going to look to add later. I would say if we don't get to 4680 today, Monday, I think, you know, if we open, say, in this area on Monday, I think there'd be a pretty cool opportunity up to this, you know, you'd look to test the 4880 area for then the move lower. So there's a number of different ways to do it based on your risk tolerance, your trade plan, your approach. So that's the lawyer answer there.
And that's one thing. That's a great question, by the way. That's one thing that we want you guys to do is to understand what works for you as a trader. In other words, develop your plan so you can be a strong independent trader. So you're not running around from room to room to room trying to catch a move on somebody. That's just not the way to do it long term. If you're serious about being a professional trader and making this a career, or at least using this to build some type of future wealth for yourself, then you're going to have to learn how to trade and set some parameters for yourself and rules, and understand what works for you, what time frames work for you. For me, there's no shorts involved on crude today. It's done for me. Friday's done. I'm done for the week, period. That's my rules. Okay. But, Josh may have, he does have different rules than I do. We do trade the same things, and we do trade similar, but we have different rules within our plans. I'm not a big fan of trading after 10 a.m. Well, that's my time. So 12 p.m. on a Friday. I've never had great luck. If anything, I've always lost money after that time frame. And I could go back and look at all my trades and distinguish that, but I know it's always been painful. And going into a weekend with the last trade being a loss, yeah, that's just not what I want.
Yeah, that's a good word. Couple of questions. Scott, you notice we don't mention ES very much. Is there a reason for that? Yes, there is a reason for that. So now historically, I kind of our styles, we like products that offer decent opportunity. And I get this question a lot of, okay, what's a good goal? Like a target that I want to capture every day. And you'll see traders like, I want to make X amount of dollars per day. Well, I struggle with that perspective because there's not the same opportunity every day. So how can you gauge your expectations relative to the opportunity that's in front of you? And I like to think of that in terms of a percentage of the range. So I want to capture 25% of the range. That's an A+ for me on any given day. Well, because the range is going to be different. There's different day types. That's going to be different. And historically, for the amount of margin requirement, the NASDAQ offers more opportunity than the ES. Also, just as a way to distinguish ourselves, there's a blue million people giving commentary on the ES, and there are not as many people talking about the NASDAQ. So that's why we talk about it. Now, we have been talking more about the ES of late, and the reason for that is because the ES is trading right now more like what we would typically experience in the NASDAQ in more normalized volatility times. So we've been trading more ES just because it's moving more. Like it's doing. I mean, good grief! Look at this. We've got 50 points. That's a massive ES day.
It is. And not only that, if the NASDAQ's very volatile, I mean, all the markets are volatile right now, but when that happens and you got to widen stops, and your account maybe not be able to handle that, and you could maybe manage risk a little bit better in the ES during, and right now you are able to do that. And we would even suggest maybe going down to the bonds in that case to be able to manage risk, because of just the volatility alone will kill you.
Yep.
And we just don't want that. Can I make a comment on that? We get that question of what to make every day. That was something that I know Josh had done at the very beginning, as did I. You make this elaborate plan. Okay, if I can get 10 points a day out of the market, if we've got an ATR of 60 and 80 and stuff like that, I should be able to capture that. That's logical, and that's what you want, and I get that. But here's the thing: execute. If you execute your plan properly, you'll make enough money. Okay, but if you're worried about the cash, then that's when psychological issues will start to creep in, and that will keep you from making money. Believe it or not, it does. So we would rather you focus on execution, and then at that point you can increase contracts based on your account size, and then the money will come. Okay. Most people, unfortunately, in the world are trading onesies and twosies out there, and there's nothing wrong with that. You know, Josh and I started that way, and in certain situations, we will trade a 1 or 2 lot. There's no doubt about it. But when you start adding contracts down the road, and when you're comfortable in your methodology, you've proven yourself, and your account size is to where it needs to be, then you can then you can increase contract size, and then at that point, the money will be there for you. So please focus less on that. Yeah, I saw something come in.
Do we use intraday volume profile for determining specific execution levels, entry stops, and targets? Absolutely.
Yes.
So that's in terms of like if the NASDAQ rollover, which I don't think it's going to, I mean we're trending. This is a trend day. I think by the end of the day we could be 6450 and higher. Same. I think as long as we keep on the trend here, if we can't get a lower low on a 30-minute in another hour, then we're done. We're just going to trend into the close today. But let's say it wasn't a Friday. Okay. I don't want to do that. And I've got a decision level up here, 64.48. I've got today's point of control at 63.94. Okay, if I got up here and found a short-term trigger, there could be a responsive move back. My target would be back towards where that high volume area is. So yeah, we absolutely use those throughout the day.
I mean, we also use Globex too, just to look. I mean, I'm looking at Globex right now, and Globex and intraday combined. And obviously we're up over some important levels here at about 64.07, and man, there's nothing above us all the way up. 65.75.
Yeah, I think they're just going to run this thing.
Yeah. It wouldn't surprise me to see us close the week on the highs, and I'm almost to the tick.
Yeah.
And that's a story. A lot of times we talk about, by the way, Frank, I did see that process over P&L, brother, is always a good motto. Great comment there. But we always talk about, we want to see how it closes today because it tells a story for tomorrow. Mm-hmm. So let's talk about that real quick. If we get a close like what we're just discussing right now, and Josh has a great chart up. So let's say we go up to that high volume node above. Josh, what is that number? I can't see that.
65.43.
All right, so let's say we go up and we close on that number, just hypothetically. So what does, we talk about biases a lot. What does Monday, what's the thought process maybe coming into Monday just based on that close right there? Well, that would say that, okay, that's pretty bullish. Now, are we going to have a reversal right there? I mean, we could get a little bit of pullback, but we're looking for certain areas to hold, which would be just that last area we just broke out of, where the swing bias to the long side starts, right? Now, we're not talking about swings here today, but regardless, we would want that on Monday, that level to hold right there. Okay, now would they come back and test that level? I don't know. They could just rotate it on Monday and then, and then maybe in the afternoon. You've heard the term, this is a trend or a day after trend day, right? Then the day after, you usually get a little bit of rotation in the morning, and then from there they may punch it into the afternoon if the market is still strong, and in this case the buyers are still in control. However, they could pull it back a little bit as well, but we would want to see that area hold, which would then give us a long bias still going in. Now, if we open up Monday morning and the Globex we sold off, there's been some geopolitical issues and stuff like that, and now we're back into, we're way back down into the range again, then all bets are off. We have to find a different bias on that. So when we look at the close today, that will help us set up our bias going into Monday morning. Mm-hmm. Does that make sense?
Yep. Yes, indeed.
Bueller.
Yep. It does. It does. This, by the way, this high volume level here. So, if we can't get there, other comment I'd say is we can't get here today. But we close. So you can see we're in a low volume area right here. This, which is a place that we could actually reject and find sellers. So we'll watch that. But if we push through that and close above that, then we've got kind of a range for next week, that's kind of in this area. And then if, I think for this year, for 2019, I mean, really for the auction to really take off, we'd have to get back above the 6,700 area to go significantly higher this year. That's going to be kind of the first hurdle. Yeah, we'll kind of see how that goes.
Scott, okay, so we have two questions, Scott, and then Josh, I'll let you answer Joel's question. Scott, this is a great question. What are the two mistakes traders make? Well, I could write a book about mistakes on trading. I would, and Josh, weigh in on this as well. I would say the number one mistake that I see traders make, and it's not one mistake, that they sort of tie together. They don't have a plan. In other words, they have never identified what their trade is. What's their sweet spot? Okay, where's the bag of money laying in the corner? Okay, and because of that, they're making up trades as it goes, and they become reactive to situations like what we just saw today. So when the market flies and you don't have a plan, like you've heard Josh and I talk about today, what happens is you have a tendency to chase. And I, as I always say with chasing, it's like dogs who chase cars. Okay, I'm a dog lover. I got one, so please don't email me with any comments, but it's like that. I mean, listen, dogs who chase cars, I grew up in the country, they don't last long. Okay. So bottom line here is one thing leads to another. That's number one mistake that I always see. Okay. Number two mistake is, even though you do identify your trade setups, you don't follow them, which leads to the same problems. Now, there's all kinds of little mistakes in there that you can make. Oh, I wasn't paying attention. I didn't have enough time. I'm trading outside my time zone, stuff like that. Those are pretty easy fix. But the the two mistakes that I see are really tied to the same thing. Have no plan, chase trades, do silly things, make up trades. You're reactive, impulsive, and then two, you do make a trade plan and you still become impulsive and reactive. And then we got to dig a little bit deeper then to figure that out, why you are acting that way. And two, what are things that we can do to keep you from doing that? I always said traders should hire somebody to sit next to them the whole time with a board in their hand. And anytime they think about taking a trade that's not theirs, they get the board. That'll stop you real quick. So I hope that helps, Scott. I mean, that's what I see mostly. And that was probably my biggest challenge starting. So, and Joel has a really good question too. I'll let you go with that one.
Yeah, I wouldn't add anything to, I would add one thing. This is implied from what JP was talking about, but having a plan, a real tactical aspect of this, having a playbook. There's a specific setup that I'm looking for, and I know what that is, and I know when to look for that. Which, I mean, this is actually an adjustment that I've been making this year. As I go look back at my performance, I'm like, I still want to be active a lot on the open, and I look at my trade logs and my trade performance. And I'm like, I'm not that great on the open. Like I end up getting in my heels or getting in a position I have to defend too much. So I've actually altered my approach this year, where I'm preparing in the evening and I'm sleeping in.
That is a nice thing.
Which, because I live, and I live in the Mountain Standard Time. So it's an early day anyway. But that's, or when it gets warmer, I can go out for a run, or I can, do something before the market, before the time that I know that I have better expectancy, and then just work on that. And if I want to be active early, that's fine, but I'll just do that in a sim mode. Or I have one trade in my setup that is a really great open trade, or in my playbook. And unless those conditions are there, and I don't touch it. So
Josh mentioned something's really good. Totally agree. And Josh mentioned something really important is, it allows him to do other things, which tells you you're able to wait and be patient. That is the hardest thing for anybody who is a trader, because when you're not making money in the markets, what the psychological feeling that sort of creeps in is, oh, I'm not doing anything. I'm not being proactive. Okay, I should make something happen. I should make money, which goes back to what Frank had says, work on your process, not your P&L. You're thinking about P&L rather than process. Okay. And in this case, you want to be thinking about your process. And when when the good times are, then you'll be there for them if they're available. And if not, you move on. Remember, there'll be many, I want you to think about this. There's going to be many, 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 many opportunities today. And when I say that, I'm going to say thousands of opportunities for you to trade this year. And if that's the case, then you don't need this one. You're going to miss a couple. And then there's more than 1,000 opportunities. There's gazillions of opportunities that you think you should take, but they're not part of your plan. So it's important to wait. And it's totally against what we were ever taught in school or in our jobs or anything like that, because we're taught to be proactive, go study hard, work hard, you'll get what you want. And you still need to do that in trading, but it looks a little bit different and feels a little bit different, if that makes sense.
Yep, absolutely. All right, Joel, your question about Window Trader. So you don't have it now. So this platform that we're looking at right now is Window Trader, and in my humble opinion, it is the best platform on the market, especially for profile traders. Why should you not? So let me talk with the why not. Is it could be cost prohibitive. You're gonna have to buy data to feed this sucker, and there's a fee per month. I use Window Trader Blue, and there's Window Trader Blue or Window Trader Lite, and it's a good chunk of change every month to have this platform and be able to see what I want to see. So the cost can be a prohibitive aspect to it. The upside is what it allows me to see that other platforms can't allow me to see, specifically around focus. When I'm doing an audit of a trader setup, often there's just so many screens and charts and stuff that they're looking at. So right now, aside from my execution platforms, what you're looking at on your screen is all I can see of the market, of any market. This is it. Because I believe very, very heavily in the need to be able to focus on the job at hand. And because the auction is taking place in multiple time frames, because there's participants that think in different, and what I mean by multiple time frames, think of it like participants in a housing market. You have some people who are house flippers, and you have some people who are like, I bought this house and I'm going to hold it forever. And you have some people who buy investment properties because they want to get the rent out of it. Like, they all are operating in the same market space. And so they have different points of reference. And what this allows me to do is this allows me to say, okay, I have the TPO chart. I've got contract volume at price. I've got the volume profile. I've got the composite profile. I've got the delta. I've got auction statistics. When I get ready to trigger, I can turn on, this is, 5-minute delta periods overlaid a histogram with volume. Like, I can see all of that in one spot. And I've not seen another platform that allows me to do that. Can you see all of this information in most other platforms? Yes, but you have to have multiple screens and windows to see it. And the more places your eyes have to look, it's like driving a car. The more things that are distracting me when I'm driving, the more cognitive dissonance can come into play. So that's why I'm such a big fan of the platform, because it just allows me to really focus on areas and not, get lured by shiny pennies and other stuff like that. And it's very customizable. The other thing about it that's different than other platforms is the ability to do things by color. So, right now you can see that the red is higher intensity of color, or this deep blue, that's a higher intensity of volume. So I can real quickly just look and go, oh, I know where the high volume areas are. The white, that's low volume. That's the lowest 40% of volume on the day. So I know where the low volume areas are. right? I can just look at it and instantly know where that is. Where other platforms, they don't allow you to have, like if you look here at Thinkorswim, which Thinkorswim's fine. And I can do some color variation on profiles, but if I look at intraday, I just have to look at the actual shape of the profile. I can't see, really any granularity about that. Here's where I'm having to look across 3 different or 4 different charts to see the same information I can see in one chart, and TOS doesn't allow me to see any kind of order flow data at all. That's something they still don't have. So that's my pitch on WindowTrader. I think it's awesome. I think good traders have good tools. So if you want to explore WindowTrader, Terry Lieberman at WindowTrader is a good friend of ours, and happy to make that introduction, and he'll walk you through it and give you the whys and wherefores on it.
A couple questions regarding
Talk about a playbook.
Yeah, Frank, I get nothing but Sierra Charts. Let's answer that one. Sorry, okay. Sierra Charts is a good entry level one. Absolutely, it gives you everything you need. It's a little bit clunky, but it does work well, and it's definitely affordable. If you're just starting out in the profile, depending on what level you are, that may be an option for you. I agree with Josh. WindowTrader Blue is a phenomenal one because it all comes in one spot, and that's hard to find. In fact, I don't think you can find that in the profile mix. So, do you want to take those other questions?
Yeah. So, talk about the playbook. So there's, in terms of products. So, Frank, you got our Build a Profile course. So we have a Build a Profile course, which is our self-directed 12 video course, which is if somebody has never experienced the profile, doesn't have any introduction to it, and even if they've never even traded before in their life, it's a fantastic foundation. I wrote that course a year ago when I had lots of friends who were like, I need to buy Bitcoin, and they were getting wrapped up in that. And I was like, oh my gosh, people are going to lose lots of money, which they would have if they had bought Bitcoin. They would have lost their shorts, because Bitcoin basically made a high. Okay, interesting side note. Bitcoin made the high the Sunday before the futures were released. And we can talk about that later as to why that was significant. But in our main development pathway, which is our profile development pathway, which is a 16-week course, very immersive and intensive. In that one, we go over the playbook and actually work with you to build your playbook and your trade plan. So what I'd say is, go through the Build a Profile course. That'll give you a good foundation. It'll get you acquainted with a lot of what we're talking about. And then, once you're through that, then do a trial with us in our trade plan and profile pathway. Would you explain the rationales of one of your trade plan or playbook? So, rationales. Ask that. I understand what you're looking for there, Tony.
Yeah, clarify that a little bit more. I guess if we're rationally, if we're trying to make it why we have it.
Why we have a trade plan or a playbook, or
you got to have it in this business, and what it does is it keeps you steadfast on what you're trying to accomplish. I go back to what Frank had said earlier. Process. It's your process. Yeah. It gives you, what you're looking for. If you just, if you're a hunter or anything like that, you go out, you take your gun, you start hunting. Do you know what you're hunting for? You're just going out to shoot something. You're probably not going to get anything, and if you get it, it may be the wrong thing, and you're going to get fined for it. But if I got my deer tag, or I got my elk tag if you're up in Josh's neck of the world, I'm going to go out and get me an elk today. So you're more specific on what you're going to do. You know what the time frames are. You know when you can hunt that person or that elk, and then how big it can be, how big it has to be, et cetera, et cetera. So all this stuff.
Mm-hmm. Another way I'll try to answer that question, Tony, is rationale. In a trade plan, as traders, we're making decisions on what we call the hard right edge of the market, right? So I'm making decisions I'm going to make subjective decisions on where I believe the auction is going to go next based on the behavior that I'm seeing. Two questions that we always ask is, what direction is the auction trying to go, and how good of a job is it doing at that? Because we know this. I mean, not just financial markets, but any market. If I see an auction that's attempting higher, so like right now, the NASDAQ's attempting higher. Okay, well, how good a job is it at doing that? What are things that would tell me it's doing a good job? Well, pullbacks are bringing in more buyers. We have successfully been migrating value higher. Volume is still good at higher prices. We've got kind of a skew of inventory to the upside here. This is what I'd call an incomplete auction to the upside. This is a trend day, and trend days, it's a very directionally convicted day, and so unless something happened in the trend or negated the trend, we're going to continue to expect that this thing would go higher. So we build in a trade plan. You're building an expectation. You're writing a narrative of kind of if this then that statements. So here's where the auction is attempting to go. Here's how good of a job it's doing at that. And if it continues to do this, then I will do X. And you'll take a subjective narrative, and then you'll express it objectively by adding risk parameters around that. Because that's the only thing you have absolute objective control over, is how much risk do I put in that. Now, laid on top of that is a playbook of trades that you're using to express inside of that larger narrative. So, like every day when I look at how the auction closes, I'll build a narrative for the next session. And then I have a number of setups, about 8 setups that I have in my playbook that I have hundreds of instances of using, that I know how those trades work. And so, inside of this narrative, if the narrative starts to play out as I expected, as the hypothesis was, then I will look to express those setups in that playbook. And it can be really effective. Now, I'll tell you one, I'll give you a concrete example, okay? So this morning, the narrative for the bonds was, we had this area, this 146.20, which you can see we tagged that post non-farm payrolls. Okay, so I knew that level before. That was where near-term value was. When I mean near-term value is that's the most traded area of the last 5 periods of the last week. So and I knew that if I go to a longer-term value, that price is even much lower. So this auction was attempting higher. So what direction is the auction trying to go? It's attempting higher. Well, how good of a job is it doing it? Well, over multiple sessions, as the auction was going higher, it was losing participants. Like, even though we had a higher prices yesterday and a pretty elongated profile yesterday, we actually had negative delta, meaning that there were net sellers while we were moving higher. That's a divergence in that. So that's saying, okay, I think if sellers can step in, and ideally, if post non-farm payrolls we can be below 148.4, then we can go back to 146.20. So that's the narrative. So then I have a playbook trade that I look to express risk on. And the playbook was what I would call an IB go with. And that's where I'd look for the IB, the IB to form. So here's the first IB. And then I look for the IB extension, which was to the downside. So that's a setup. Then I'm looking for a rotation back up into here, using the high as my risk to be short for that target. And so if a rotation came before it got up here, I'd be short back to 146.20. It didn't give me the rotation, I didn't take the trade. So, according to the plan, the auction behaved in the direction I wanted, but when I tried to add the playbook on top of it, the setup didn't arrive. So that's okay. I dictated, in so much in markets we have no control over. What we can control, again, is our risk and where we choose to express within a narrative that we've controlled. But you have to start with, do I have a narrative on where I believe the auction is going to go? And that requires the skill of these behaviors in the auction. Okay, if the auction's been going higher, well, what's next? Next is there's going to be some counter behavior that would shut that auction off. We got that today. Typically, there's some kind of pullback that allows you to join that. There just wasn't. So that's how I think about that. And this is the type of work that we do in our pathway. is to, to describe this. And it's not one of these things that you can just grasp. It's why we go 16 weeks. And then, even with with those 16 weeks, we focus on 2 ways that you can express one setup. Get those down, and then you start adding to it.
Yeah, and you don't need a lot of setups, and I think that's what Josh is alluding to. You can do very well with 1 or 2, and let's face it, there's really only 4 different trades out there in the world, right? Now, there's variations of those trades, and that's what Josh is talking about, and then the context behind those and how they set up and what you're looking for. If you don't know those, you're just guessing, okay? You're chasing. You're doing something that isn't right, and you have no way of identifying or like Josh says, the only thing that you can control in all this stuff is your risk. You do that with a stop. And if you can control that, then you have good chances of making a career out of this. And the way you do that is obviously what Josh had just mentioned, is develop a plan, playbook. Yep. But first, get one, get one play. That's the place to start, and get really good at it. I have a bread and butter. I know Josh does as well. And we have a bread and butter. And I would say that, I don't know, what would you say on yours? I have to go back and look, and maybe I will now that I say this. I would say probably 75% of what I trade is that bread and butter.
Yeah. Oh yeah. Yeah. Absolutely.
And it treats me very well.
Why go, trying to just the myth of activity, right? The myth that I have to keep being active, will hurt you over and over and over in markets. And I bet, if you've had period of struggle, you continue to have period of struggle. If you go back and look at what you're doing, you're going to find that you were really active. And a lot of that stems from the fact that you don't know when not to be. You just don't. And so that's a place to work on your development. Yeah. Sometimes the best trade can be no trade. Absolutely.
That's a great question.
Let me talk a couple next steps for everybody off of this session. So one is to look at practicing some selecting some better times for your trades. We talked about one is that after that first hour, let that first hour, because 97% chance that you're going to exceed that range of that first hour. So let that happen, and then come in to express an opinion, knowing that past that first hour, unless it's a trending situation like we have today, you've pretty much seen the range. So that's going to help you control some risk. It started with our profile, or with our pathway. We offer everybody a 1-week trial where you can spend a week with us. We actually have 3 different calls like this throughout the week where we dive in depth and talk about trade setups. We look for trades together, and do this every week for 16 weeks. But want to give you an opportunity to experience that in a trial environment. And if you are on Twitter, you can search for Trade with Prof. We're also on Facebook. And then, if you need any help or have some questions and even want to know, hey, is this going to be a fit for me? You can send us an email at team@tradewithprofile.com or give us a call, and we'll be happy to follow up with you from there. Well, thank everybody for being with us today. I know we've gone a little bit long, but we had some questions. So as long as we have questions, we we want to honor that if we have time, and we're there's no trades today because we're trending higher into the close. And thank everybody for keep working at it, and just encourage you to we're at the beginning of the year. The first week now is already over, and start looking at, okay, what's my process? Focus on process, focus on approach, and reach out and get some help if it's not working. And
yeah, exactly. Just do what you need to do to make it work, because you can make it work. Okay. You're going to find that you need to do a couple different things differently, and hopefully some of these things will give you some insight into that. And again, feel free to reach out to us. We'll be more than happy to answer any questions and go from that.
All right, everybody, have a fantastic weekend, and we'll be back next Friday with another session, and we'll see those of you, if some of you jump in with a trial with us. We'll see you this week. We'll see you on Sunday.
Have a good weekend, guys. Happy New Year.